All right, what's up, everybody? Welcome to the Friday Mastermind. Every Friday, 9 o'clock, we are bringing in just amazing leaders in the mortgage space. Sometimes it is top producing mortgage professionals. Sometimes it is authors and leaders that we respect. Today, we have the one and only Clayton Collins, the founder of HousingWire. And the way I like to position him as a new media entrepreneur. What's up, Clayton?
I like that categorization. Media entrepreneur. I'll take that.
Yeah, new media, because
New
you
media.
are you
Yeah.
are you were going where people have not gone before. So before we bring in Clayton and start the topic at hand, Mr. Bookspan, Mr. Win by Noon, anything you want to say to frame the call today?
Listen, it's Friday, and we all have the ability to learn from one of the biggest brains, the mind that's looking forward in our industry. And I'm looking forward to hearing what you all talked about at the conference and where we're going to go from here. And as always, it's fun to have none other than Miss Deborah Bird here. What's up, Deborah?
Hello, I'm excited to learn from you, Clayton, and create some micro clips because y'all's content sure makes me sound smarter, which it makes my clients sound smarter. So I'm excited and thank you for being here.
Well, I'm happy to be here. And I was like, I guess one reason I love Dave's categorization as a new media entrepreneur, because I'm the lucky one who gets to surround myself with great journalists and content creators and experts like yourselves that actually are doing the work, talking to sources, doing the analysis. And I'm kind of just like the beneficiary that gets to talk to a lot of different people and then try to absorb information from different places.
Yeah, and the reason I call it new media because one, you've brought in multiple media platforms together in mortgage and in housing, but I probably wouldn't have used that word or said that, but you bought a data company. You really
Yeah.
understand. And you didn't just buy a data company, you bought a data company that was being very innovative for both mortgage and real estate around hyper local data. And then to me, the idea of, okay, we're data driven, we're hyper local, we are innovating, bringing both mortgage, real estate, and housing together under one platform. To me, that's
Yeah.
new media. That's pretty innovative. What are your thoughts on that?
No, I mean, it's for me, it's what I do. I've been doing it for 8, almost 9 years now. So it feels like this is just the way it should be done. But I recognize it's not the way it's done everywhere. I actually am fortunate enough to be speaking at a media operator event in a week and a half in New York. And that invite and the folks that I'm surrounded with from a lot of the bigger publishers in business media, is a good reminder that we are doing something a little bit different over here, something worth talking about.
Yeah, well, thank you for, acquiring these other companies. Thank you for putting on the gathering. Before we start unpacking the AI summit and the IMB summit, Clayton, I have this belief that this is a really special time in the mortgage space. Like there's just these pivotal moments. First of all, in a life, when I married my wife, that was a pivotal moment in my life. So there's these pivotal moments in life, and then there's these pivotal moments in industries. Like, hey, when the iPhone came out, that was a pivotal moment. There's other things that have happened that have either been driven by technology, they've been driven by market trends. Sometimes those pivotal moments are driven by new laws and regulations. And I think we have kind of everything going right now. We got AI is here. The world has seen it. So we've got new technology, we've got new laws. What's your thesis on that? That this is a really pivotal moment for housing.
In the confluence of market forces and technology at the same time. So one of the topics that has popped at the AI summit this summer and earlier this week at the HousingWire IMB summit is the opportunity that we have ahead of us in the market as we look into a 2025 with pent-up demand and a rate environment that we can't make bets on exactly where it's going to go yet, but we hope it's going to be more favorable than the last 2 years. And at the same time, still dealing with a profitability crisis. We have a bifurcation of lenders that are profitable and another bifurcation of lenders who haven't figured out how to actually drive margin yet. And all of this is happening at the same time as we're actually seeing a leap forward in technology, and AI has the promise, and for some lenders is already delivering results on a much more efficient ecosystem that helps mortgage lenders run at a better margin profile, improve user and client experience, and potentially change the world when it comes to servicing and recapture. So like there's some things that are happening on the technology side that had to happen to really help the mortgage industry take a leap forward. So you have this market force and technology force meeting at this really unique time here in Q4 2024.
Yeah. And I believe that as 2025 plays out, it's a pivotal year for both leaders of mortgage industries. And let's just focus on IMBs because we just did the IMB summit. We're going to unpack that. And for loan officers, whether you're in the broker model, you're in the IMB model. I do think the banking model is a little different. If you're a loan officer in the banking model, like you are wearing the jersey of a lender that has products, processes, and a strategy that, depending on that bank, that product, and that strategy, it'll kind of like dictate. It will have major influence. But if you're an IMB LO or you're a broker LO, like it's upgrade time. Like you need to upgrade your skills and your habits to meet the future of lending.
And we can, talk about the trends through wearing two different hats. We can talk about the companies and the institutions, and then we can also talk about the people, Dave, because this is a moment where there are leaders, there are people that are starting to separate themselves and help their organizations separate from the pack. And if you like, really zoom out and look at the mortgage industry and 5, 10, or 20-year periods, there are step change times when a new generation, a new breed of leader really steps forward to meet the market and technology demand where it is. And I feel like we're kind of in that moment right now, starting to see new faces, new leaders come into the industry and elevate themselves inside of their organizations, whether we're talking about production or corporate leadership, that I think are absolutely necessary to actually achieve some of the change that the companies and industries needs to achieve in terms of doing things different and doing things more profitably.
Okay, cool. I concur 100%.
Yeah.
Hashtag. So guys, let's do Deborah and Todd, let's do this where I'm going to ask the first question, and then Deborah, why don't you, we'll have Clayton answer it. You ask the next one, Todd, and then we'll just round robin. Because I think it will be, I was at the event, so I can always add my color, but I would love for you folks representing our community asking Clayton the questions that you want to ask. So be ready to hit it next, Deb. And everybody watching this, if you have questions, this is truly a mastermind. We will bring your questions to bear. So feel free to put anything in chat, whether you're watching this live on Facebook or you're in this Zoom channel. So Clayton, my first question is really, why did you guys this year, 2024, you rolled out 2 inaugural events. One is called the AI Summit, and one is called the IMB Summit.
Yep.
I'm sure that those were not the only 2 ideas that were considered. And you rolled out 2 inaugural events. So why?
Yep. So we've been experimenting and testing in the event market for the last 7 years. And before COVID, we started with a series that we call the Engage series. We had Engage Marketing, that was all about loan origination marketing. We did Engage Talent, which is about recruitment and development. And that helped us kind of learn events. There's a lot of media businesses and trade organizations that have been doing large and small events for decades, but we wanted to learn it and learn how to do it our way. COVID changed things. I think COVID, created some opportunities in the event space. And when we were kind of coming back into the world in 2021, where people were eager to get out and interact and learn and build their network and community at these in-person events, we said, okay, this is our time to do something interesting. So and I'm really giving the long story here, Dave, but at that time, we acquired Real Trends, and a big reason for that was the Real Trends Gathering of Eagles, an event that had been bringing together the top leaders in real estate brokerage for decades, and took a lot of the the structures and tactics that Real Trends have been doing for decades. And we knew we could bring that to mortgage. So we took the Real Trends Gathering of Eagles, merged it with our HousingWire annual event, and created the Gathering, and committed to the fact that we're going to have one tentpole event, the Gathering, that brings together leaders from across the industry. And so that brings us to the one-day summits. For us, the one-day summits are another point in the year to get together with our audience and our clients and our sources and our team and come together as leaders in a quick one-day format. And we're, kind of selfishly doing this in our home market in Dallas. It's also a great market for people from both coasts to fly into, in quick one-day formats that gives us a chance to touch base with the industry in a hand-to-hand way. When you're a publisher, I guess we communicate with our audience every day, but a lot of it's one way. We're kind of pushing information and not always getting the feedback loop. Events give us the chance to get that feedback loop. It lets us test new speakers and topics on stage that we may be able to bring to the Gathering, our big tentpole event. And also lets us test themes and introduce new people to HousingWire and HousingWire events that, if we do our job right and we put on great content, we provide great community, they join us next summer at the Gathering at the Broadmoor in Colorado Springs, which is truly the time where we get to bring our full audience together and help our mortgage audience meet each other, but also meet the real estate brokerage audience and some of the investors and home builders and other folks that read and consume HousingWire. So we have this kind of unique strategy of we're trying to cover the housing industry as a sector, and there's a lot of different segments of audience and a lot of different topics, and we use events to help provide specificity and information. So the IMB Summit, super specific, but it helps inform and educate and test concepts that we can bring to the big stage at the Gathering in the summer. So there's a few different objectives in the strategy, Dave.
Is Dave frozen or is it just me?
I think I was just that impactful. He's lost.
Oh,
He's
well, I
frozen.
have a question.
Let's do it.
For new loan officers that are listening to this, or maybe some who don't know of HousingWire, beyond just the one-day events and the Gathering, would you share some of the even free resources that they could tap into to help keep them educated on the housing market? Is there anyone you suggest to follow on social channels? But imagine if you were a new loan officer and you're trying to learn, and put in some study time each day, where would you direct them?
Yeah, absolutely. So the event strategy is part of what we do at HousingWire, and all of our events are focused on the leadership of the housing industry. We're talking about real estate broker owners, mortgage bank executives, regional or branch production leaders. We're really building for the leadership. We invite loan officers to come, but we recognize we're not putting on a loan officer event. But what that content does is it informs our podcast and our analysis and our article strategy for the rest of the year. That really does help loan officers. So we publish a newsletter called Lending Life, specifically built for loan officers. And that's a newsletter that we're actively evolving all the time and doing a pretty big refresh on right now. So we'd love to invite more loan officers to follow the Lending Life newsletter, free resource by HousingWire. James Kleiman, our managing editor, is a lead editor for Lending Life. And if you want to talk about following people on social, James has been much more active on LinkedIn, providing a lot of the content that we publish on HousingWire. He's talking about in videos and text content on LinkedIn. And we also incorporate a lot of the economic and data work that Mike Simonson from Altos and Logan Modashami, who's our lead analyst for HousingWire, do. So Mike and Logan are great follows, specifically on Twitter. They're both very active on Twitter. So if you are I don't think Twitter's our biggest loan originator social platform, but if you are a Twitter user and you want the economic data, Mike Simonson and Logan Modashami absolutely kill it and share a ton of knowledge on Twitter. And you can follow.
They're very
James
entertaining.
They are. I mean, that's the cool part.
Yeah.
Logan specifically knows how to bring humor storytelling, lightness to like a really complex topic. And I think one of the things that's made him pretty popular is his ability to bring in bring in pop culture and bring in like creative analogies to explaining what's happening in the housing market. Like one of my favorite is how he talks about the relationship between the 10-year and mortgage rates. And he calls it the slow dance. And like, I mean, if you watch him on video, he literally like kind of slow dance as he talks about like the relationship between the 10-year and mortgage rates. And it's been really popular. He also like pulls in some analogies from Game of Thrones and Hodor as he talks about like the Fed holding the door. And there's some really funny things that like Logan does that he doesn't just say once and hopes everybody captures. He knows that if you want to win in delivering a message and teaching somebody, you have to say it once, say it again, say it a little differently, say it again. And so like Logan's great at reinforcing points and really educating through a kind of a colorful approach to talking about business topics that could be really dry if you didn't have the right personality in there. So yeah, you can also catch Logan on stage. I think he's on he just got back from Acuma. He's on like, I think he's on like 15 stages in the next few months. So
Wow.
we'll start sharing more of that. He's pounding the pavement right now. I saw him on stage 2 weeks ago at the Rhode Island Realtors event in Rhode Island, which was really cool. So the guy's out there.
So the bottom line is you all know that there's great free resources at HousingWire. You should be taking advantage of all the things that we were just walked through by Clayton, because there's great opportunity for you to do what he said Logan's doing, right? Tell it once, tell it again, tell it slightly different. And that's really what Debs continues to teach us all on social media. So it's, I like this idea of the slow dance. You know, obviously not all of us were at your recent summits that you had. If you could pick one thing that you think would be a big surprise for those of us from either summit that weren't there that you learned, what would that be?
So big surprises. I'd start with, can I start with some like the biggest, like the most impactful takeaways and stay in this message of like storytelling for a second.
And by the way, nothing surprises Clayton. So like that was right when you asked that question, Todd, I was like, that's a hard question to ask a guy like Clayton. Like he's not surprised.
Surprise. I'm surprised at how aggressively forward-looking the FHFA is on technology strategy. So Anne-Marie Pippin was on stage with Sarah Wheeler, and they are not messing around with how they're thinking of innovating in the mortgage space and how that's going to push through the GSEs and push into top mortgage lenders. Like they're not screwing around with AI strategy, efficiency, product innovation. Like it is forward looking. Dave, jump. You were in that room. Like, what did you think about that?
Yeah, no, that was surprising. And then what's the guy's name who's running the MBA?
Bob Brooksmith. But Bob Brooksmith did a phenomenal job on stage. Like he did
a phenomenal job at where I was going to go, and I didn't see it coming. He was asked about what did they think about Kamala's $25,000 grant, and his comment was, we don't need another $25,000 national down payment assistance program. We need America to know that you can buy a house without 20% down. And we need to do a better job. And that, by the way, he said that was per quote. And then I'm going to kind of pontificate. We need to have an industry that does a better job of educating everybody in America that you can get into home ownership if you want that enough. And you need, and the industry needs to do a better job of educating, empowering, and inspiring people to be motivated of buying a home. Anyways, that was a surprise. Like that was my takeaway North Star.
If you take Bob Brooksmith's comments about needing programs and tie it back to Mike Simonson's opening session. So Mike did a housing economics session to open the day, and he shared a chart that showed the growth rate variation by year for home purchases over the last 20 years. And the surprising part of that is like, it's very rare, if I don't know if it ever have more than like 9% like purchase volume growth in up years. So like we talk about this like super volatile market, but it's really kind of tops out at like 9 or 10%. And what we've seen in the last 20 years is a few big, like, sorry, that mic hit was loud. A few big years where like we hit 8, 9, 9.5% growth. And the next year it drops off and it's like 8% decline in purchase. That's not because of a recession. That's not because of like some shock to the housing system. It's because in those growth years, there was a down payment assistance program that pulled forward volume. So like if you look at that analysis and you frame it out to the impact of different housing programs, we're not actually growing the pie. We're just pulling forward volume or pushing it back. And like, so we end up with these hangovers that can be program driven. Now, I look at this from a data perspective, and I don't look at this from the perspective of our DPA, down payment assistance programs, or other home buying programs, good or bad. I think they do serve a purpose. But I also think, like Bob said, we already have some pretty good stuff in market that if the education is there, people can access home ownership without the DPA.
Yeah. So let's put an exclamation mark on Todd's question and what were the most, and the way you want it. Well, you answered Todd's question now, but let's answer that question. What were the big, and by the way, I'm going to use my question to do it. So Deborah or Todd, you can go next. What were some of the most valuable things, like, things that you just think everybody needs to know, whether they were at that event or not?
Man, there's one session that I feel like I've talked about a lot in the last 3 days, and it's because it deserves it. And that was Sean Panosian's keynote about growing through change. So Sean is at Rate, formerly Guaranteed Rate, leads one of the largest origination businesses in the country. His team, he's the lead guy. And I think he shared that people often think he has some secret sauce or formula or like that just helps him separate and really put up big production numbers. But he said he doesn't. And he shared his playbook that is incredibly fundamentals based. The guy is incredibly analytical, watching like 14 KPIs in his business every single morning with a big emphasis on being out in market and being the rainmaker and just driving business into his team. And he had a quote that like I just absolutely loved. I wrote it down. I've shared it a few times. And he said, "Hey, I wasn't born with the skills or the DNA to be a professional football player, but I am a professional athlete and my sport of choice is mortgage lending." And he treats his business like a professional athlete would treat their game. And that's an emphasis on training, role playing, coaching, and repeat. Like the guy just like impressed the hell out of me with his focus on the fundamentals, the focus on doing the same things over and over and over again, the focus on understanding the fundamentals that make him better, but also understanding the habits that make him worse and getting rid of the habits that harm and building on the habits that make him better. I found it a very inspiring session. I took a ton of notes, took a ton of pictures of his slides. That was one of my favorites.
I mean, there's no doubt that
Yeah.
Shant is a.
No, I'll put an explanation on that one. And I think a lot of folks, if he was at the top rated speaker, what was your favorite? I mean, his name always came up, and a number of times, and quoting something else he said on past interviews I've had with us, he's like, I don't pay attention to what interest rates are doing. Focus on the economy, focus on the action, and the things that I can control. And I do think industry kind of playing off of that thing that we need to do a better job of creating awareness that you don't need 20% down to own a home. And let's not worry about it. There's people winning in every market. So I love that clip.
In his frame on that was like, hey, there's things that you can't control and there's things you can. So his energy goes to the things he can control. But when I watch him from the outside, I do notice that he does a lot of education on social and in his newsletters and in his in-person speaking events at real estate brokerages, educating on the things that we can't control. So he does talk about economic drivers that are out of his control. He does talk about rates, but he doesn't let those things derail his energy or change his habits. He knows how to teach to them. He knows how to make the people around him feel smarter about these economic drivers and things that are happening in the news. But he, like, when it really comes to where a lion's share of his day goes, it goes to the fundamentals that he can control. So I
Yeah.
like that a lot.
Yeah, so let me wrap a bow around that. And then Todd, you asked the next question here. This is actually a quote from one of his slides. The biggest opportunity for success and growth comes during the most challenging and chaotic times. And to Clayton's point, I mean, he has been studying HousingWire. He is a customer of the data solution, and he's just taking that data and then putting his leadership, his context, his personalization, his localization around that data. Yeah, so again, follow Sean if you don't already follow him on social media. Follow him. I'll put a link down below to one of my favorite interviews. Are you going to do like you guys did with the IMB summit or the AI summit, where you release the actual presentations for people to watch them?
Yeah.
Or is that something that only people that paid for the tickets get?
Yeah, so we're dropping, it's going to be a mix, Dave. So we're dropping, I think the first tranche of on-demand videos goes live today. Some are going to be for HousingWire subscribers, some will be open to everybody. So I'll share that link. I don't know exactly which ones we're publishing yet, but I know our team is sprinting in the background to get those you know, when you host an event, the event production company drops you a single file, like a 9-hour video file that has to be like edited and produced into something publishable. So we're in that like sprint mode right now. It is there's got to be a better way to do that. But yeah, we get this massive file that we have to like turn into like publishable content.
So guys, if you are a mortgage coach and you believe in everything that we teach on this show, you should absolutely be a full premium subscriber to HousingWire. One, you're supporting the industry. You're just like supporting the MBA. You should be an MBA member. And I talk about what that means as a professional to support, at a minimum level, the organizations that elevate our industry. But then two, if you want a news hack, you should be following that stuff so that you're smarter. The best of the best are smarter because they read and they study the right content. And then they use that to power their social media content. They use that to build their local community brands. They use that to be leaders to realtors. So we'll put a link down below. If you're watching this in our YouTube channel, I just can't emphasize it enough. If you subscribe to anything on a professional level, this should be at the top of your list.
Yeah, $324 a year or $40 a month. If you can't extract that level of value out of it, then move on.
Yeah.
We're not meant for each other. So that's kind of
Concur.
how I look at it.
Concur. So Todd, next question.
Well, I'm a subscriber. I just want to really highlight. I mean, he talked about Sean saying that he actually is in the chosen professional sport of being a mortgage loan officer, right? You're all watching this. I know I'm preaching to the choir, but the bottom line is you have to be thinking about what are your KPIs that you're watching in your business. If you're an individual LO, you should be tracking KPIs. Like, what are the things I need to do today, right? And then what are those results, right? You have lagging indicators, which are the things that are closed loans at the end of the spectrum. And over here, you've got your activity, the calls, the meetings, the other things that Clayton highlighted that Sean is also doing. He's getting out there and educating. And so if you don't have KPIs that you're tracking, you're going to struggle to actually measure and grow your business. And there's a reason that Sean is number one. It's because this is a profession for him. He works all day. He works with a team. He's built it up. And then if you're a team leader, you need to be helping your loan officers on your team, or if you're a branch manager, you need to be helping your team and your LOs and your branch get better. And, it's your job as a leader to help them figure these things out. And so that's one of the things you'll know that Dave and I are super focused on right now, is really how to help you team leaders grow and branch managers grow. So stay tuned as we talk more about that. But, I would love, Clayton, for you to dig in a little bit more when you talk about the fact that FHFA and that we're going to have this new technology come. I mean, what's a glimpse of that? Like, what's an example of where they're going to use technology or AI that's just going to move our industry forward, that might either inspire or scare some of our people who are watching this?
So I mean, they're not going to be like the ones who are like building the product, but what FHFA can do is collaborate with the industry on tech sprints, and then be a regulatory partner and helping make sure innovation can actually come into the industry compliantly. So one of the issues and challenges of the mortgage industry, I think we've all understood for a while, as a heavily regulated industry, innovation in a heavily complex integrated industry, innovation is challenging, because you can't just build product and ship it. And like, there's all the vendor management and regulatory and compliance loopholes that you have to pass through. Where FHFA can make an impact is being a innovation partner. And when like things are happening in the industry, whether it's talking about user experience technology that makes it easier for servicers or originators to stay in touch and monitor their clients or their servicing book, or things in capital markets that make it faster or more efficient to run their secondary desk. Like that, I think that's where a lot of the innovation is happening right now. And the FHFA is hosting tech sprints and inviting innovators into their arms and into their office. And so what that means for me, and I guess the originator perspective, is that it furthers the bifurcation. So like, there are people building and investing and making their origination, capital markets, and servicing processes faster and more efficient. And there are people who are not. So like that's what I'm watching most right now from like our vantage point at HousingWire, is like who's investing, and that's going to result in who is going to win market share and gain market share in this upcoming wave. And who's sitting on the sidelines, that's either going to be forced to buy technology quickly if they have the balance sheet to do it, or lose market share. And, that ultimately becomes probably an unattractive place to be an originator.
So, Todd, before I ask the next question, anything you want to expand on that? Or are you good?
No, I'm just fascinated by it, right? I'm like having serious FOMO. I saw everyone was at the event, and I'm like, all right, I will make sure I'm there next year, because I do think, you keep talking. I love that word bifurcation, right? And it's a little bit interesting right now in the industry to see where it all goes. And I think it's just one of those things that as originators, we need to be paying attention to, because we want to win in the future. And so I'm sure there's lots of questions that I'm not thinking of today that people should be asking of the organizations that they're part of. So I think I just love it. And, I'm interested to hear what else you would pile onto that, Dave.
Yeah, well, to me, an important topic that came up multiple times, and I can't remember. I know it came up multiple times on stage, and then I know it came up in just meetings that I was having, was just that this is not, the industry's never going back to where it was. Like, there's a lot of belief that, oh, it's going to be like it was back in 2018. And one example of something that, you can't take the genie out of the bottle is servicers have gotten better at being servicers. And it used to be, and I know because we have a lot of them as clients. And it used to be because, a private equity firm would invest in a servicer or buy a servicer if they could get a 30% retention rate. Like, that was, the numbers worked at 30% retention rate. And guys, we have servicers that are well over 50% servicing right now. And so a combination of technology, a combination of their cost of goods to deliver and keep a loan, like, it's never going back. Like, refis are going to be harder. And I have more meat to put on the bones on that. But Clayton, what was your takeaway from the IMB summit. I think it even came up at the AI summit.
Come up in every conversation recently. It stole the show at the AI summit, to be completely honest. Like,
Yeah.
there's way more conversation about servicing innovation than there was about origination at our AI summit. And that doesn't mean that it doesn't apply to this conversation we're having right now, though. So servicing has been wild to watch over the last, oh God, 15 years since like the GFC. Like, the first 8-9 years after the housing crash, like anything, if you talked about servicing, you were talking about default, and like that was the focus. And then it just kind of, servicing got super quiet for like the period leading up to COVID, when forbearance became kind of like the big servicing topic. Now, what was happening throughout that period is institutional capital was getting more and more comfortable with this great credit quality consumer that we have right now. And if you followed any of Logan or Mike's work, which if you don't yet, I hope you will, you will see charts that show what Logan likes to call like the sexiest chart in housing, that he will open a bottle of wine and sit on his couch on weekends and just stare at, which is credit quality FICO scores of today's homeowner. And servicers are looking at the same thing. We have really good credit quality right now of current homeowners, current mortgage holders. Servicers see the same thing. They're not letting that homeowner just walk out the door after they've either originated or acquired that servicing right. So the amount of spend and innovation that's happened amongst the big servicers, and like there are servicers, I think there's 3 servicers, might be 2 right at the moment, that have eclipsed $1 trillion in servicing volume. They are not screwing around. Like, they are going to retain these borrowers. They are their customers in their eyes, and they are going to retain them. And they've built AI, they built communication tools, they built self-service tools to help these borrowers understand their refi opportunities, understand their cash out opportunities, and even understand their repeat purchase opportunities. And the most concerning thing, if we're really going to talk about what people might misunderstand about today's market, is that if we do see a mini refi wave in the next 6 to 12 months, it's not going to look like refi waves of the past, because these servicers are ready, prepared, and like the guns are loaded to retain and recapture that business. That is becoming very clear. Now, will they be successful there? Time will tell. But like, they are not sitting on the sidelines saying like, oh, okay, well, we're going to watch this, 70% of this business walk out the door, and we'll just go, when they refi with, some other originator, we'll just acquire those mortgage servicing rights again. That's not the business strategy.
Yeah, that's not plan A. And so they're good. They're going to have really tight margins. So, I want to interpret this for you. Like, you're watching this, most likely you are an IMB executive, or, a retail executive, or you are a retail loan officer, broker, banker, an originator. So let me interpret it to you. This is not a market you've ever seen yet. I love the word that Brian Hale used a couple of weeks ago when I interviewed him. He called it a boomlet, little refi boomlet. And I'm like, did you say that right? And he's like, yeah, no, I said boomlet, because we're going to see something. It's not going to be a boom. We're going to see a refi boomlet. So quote Brian Hale on boomlet.
Good one.
And I like that term. And I also think it's fairly accurate. It is, if I was planning from a top-down perspective, I would plan for a boomlet. And Logan had a really cool slide where he kind of laid out, hey, this is where we're at. We have entered the opportunity zone. So if you're a loan officer, first of all, get lean on your comp. Like, this is, like, even if you get to the consumer first, before you close that loan, you're going to have not only servicers, but you're going to have online lenders. Like, the data is available. You're not just going to get shopped. You're going to get grinded. And so get there first, and then make sure that you deliver more than a transactional experience, because someone else is going to tell them, I can get you X rate. I can save you X per month. That's why I've been interviewing the best of the best, where you need to like, I can save you $373 a month, be precise, or we can do that same loan and you can save $240,000 over the life loan and pay it off 7 years faster. So you need to be thinking like, I can help you pay it off faster. I can help you save money. It's why Mortgage Coach putting this documented graphs and charts, showing the family, like if you're local and you're a human being and you're an advisor, you need to give them advice on how they can build wealth with real estate faster and how you can help them beyond the transaction. Because when it comes to the transaction, the servicers are going to give great transaction. Anything you want to add to that? And then Todd, feel free to circle back around.
You know, some of the conversations on stage also hit on like some historical views on like thinking about like a strike price of like a strike rate of when it makes sense to start talking to a borrower about a refi. And there was also some conversations about the time frame of which you may, when it's too soon to start talking to a borrower about a refi, or too late. And I think where that landed is like some of those old principles are, it's time to throw them out the window, because there's some things that are different right now. We're not just talking about interest rate when we're talking about loan review and talking to your client. We're also talking to people who likely, if they purchased, you know, prior to 24 months ago, are likely sitting on a very significant amount of housing, home equity or housing wealth. And there may be other conversations that it's time to have. And then there's the timing thing of that, like it is a race to these borrowers. Their servicers are already talking to them. So like, if you think you have any shot at going back to past clients, or folks, anybody in your book, like just know that they're already being approached by refi centric shops and their servicer. So like, you can't be too early. And I felt like that was a different message than I had heard in past refi cycles.
Yeah,
Well, and I
Todd.
would say, right, I've been talking about it for a year with you all, right? So those of you who remember, I talked about how to make an extra 100K this year, a little over probably 13, 14 months ago, and it was get in touch with your database. And I talked about it a few weeks ago. I just had 5 of my rental mortgages purchased by Rocket. And I'm actually kind of scared by that, because that just tells me that all my clients that did loans with our company at the same time that I did probably now have Rocket. And you know what? The other servicers they had were okay, but you know, Clayton highlighted it. They're all better now. And I think Rocket probably is going to do a great job of going after to retain those clients. And so if you haven't been communicating, you're already way behind the 8 ball, right? Your servicer's communicating every single month, at least once a month, sending a statement in the mail or sending a statement via email. And I like the idea of a strike rate. I actually like the idea better of a strike payment savings. And the reason that I do that is because if you can help identify what's the client looking to save, if you can help the client understand that you have their back, that you're going to watch out for that without necessarily giving them the rate. The challenge of a strike rate is that they're going to get something in the mail from a refi shop, from somebody that says they can get a super low rate that we all know probably may not be the best, with a super high fee on the other side of it. I had someone call me, a friend, who said, "Hey, you sent me a letter." So they thought it came from me, and it wasn't. It was from a refi shop, and it said that they could get 5.75 cash out refinance, all the money they were going to get. And I was like, you know, that was a tremendously expensive opportunity at the time. Rates were nowhere close to 5.75%, but it fooled this person into thinking that. So you've got to, if I would have said to them, "Hey, your strike rate's 5.75, they might have been fooled to jump into that. And so I would just encourage y'all, you know, you just heard Clayton say you're probably behind, but your clients loved y'all. You did a great job on your loans. You did a TCA. They understand that you have their back. You just have to continue to remind them and probably talk to them more frequently between now and when you can actually hit that strike rate that you're looking for, that strike payment savings. And so I would just encourage y'all to think through, right? Your professional loan originator like Champagnosian, well, what do you need to do? That's going to just be, unfortunately, doing the boring stuff. It's going to be making the calls, which can be exciting to catch up with them, but you're just going to have to put yourself to work, because you've got to unfortunately outwork and out communicate from your servicer. That's my take on it. Dave, what else would you add to that?
Yeah, well, I'm going to just pull from, I interviewed Jeremy Forcier. Clayton, do you recognize my background there? So I did
You're back at the George Bush Center.
I did the
Wait, is
Tuesday.
that from this week?
Yeah, this was Tuesday.
Oh,
So
amazing.
that was me. And then I was interviewing one of America's top mortgage professionals, Jeremy. I'm like, "What are you doing today?" So here's the cliff notes, guys. The cliff notes are: one, he's not just calling, like he's calling the consumer, he's leaving the message. By the way, here's his script, which I guarantee is going to be, you want to learn how to beat a servicer? He's got a script. hey, do you want to save $353 right now? Or 241,000, save almost 3 years. I mean, save almost 7 years off your mortgage. So that's his script. And by the way, he's calling, he's texting, and he's emailing. So he's literally, and not in a tone deaf way, not like in a call center way. It's like, hey, I'm managing your mortgage. It's Jeremy. I told you I'd get in touch with you. The reason I'm, calling is like, this is important. Hey, I'm texting you to let you know that I called you because this is important. Hey, I'm sending this email just to make it easy to respond no matter you want. Like he's servicing the consumer. This is important. And then you notice not only is he showing a couple options, and he is showing like, hey, I can refinance you when rates go down. Because that's the other thing. People are like, oh, should I wait till after the presidential election? Well, Jeremy's like, I got you. I'm managing your mortgage. I'm your loan officer for life. So, so that's what Jeremy's doing. And by the way, I put a link to that interview in chat, and I put a link to that presentation in chat. But like, that's how you compete with a servicer is you give more value beyond the transaction. Todd, I saw you wave your hand.
Well, yeah, and one of the things I loved when we had Jeremy and Shayla on last Friday was Jeremy talked about the fact that he's got, at that time, it was almost 20 loans that he's already got the new applications, documentation. And so the client has already started the refinance process, even though they haven't hit that strike rate yet. And so think about that, right? Those clients are now off the market to their servicer because they're already going to say, sorry, servicer, I've already started the process with the guy managing my mortgage, Jeremy Forcier. And so don't also feel like you can't do that, right? Granted, we've had a little movement in rates the opposite direction of what we've wanted, but it's scripted out, right? The dot plot graph said 150 basis points potentially over the next 15 months. And so why not use that as kind of the little cheese for the mouse for your clients to say, hey, well, let's get the process started. I can't promise you it's going to be next month. Could be 3 or 4 months till we get there, but let's get the process going. So I'm ready. I can work faster for you to save you so that if we do hit the boomlet again, I like that, Dave. I use that boomlet rate that we saw before where it was only a short window that we had to lock in lower rates. We can grab that for you. And so I think that's one of the other strategies I would encourage you all to implement immediately.
Yeah.
And
by the way, Jeremy's, oh, go ahead, Clayton.
And I'll like just throw this out there. And this wasn't an on-stage conversation, but there were some backstage conversations from some smart people who originate a lot of loans and sell a lot of loans into the capital markets. Is that the buyer pool for MBS is so quiet right now, despite moves by the Fed. We very well may not see dramatic moves in rates ahead. And like there was some pessimism on rate direction in the back room. So like I don't know, I'm taking that into account as I think about projections for next year and how I bet on which way the market moves. And that was backstage, but on stage, we've also learned that refi and purchase volume is more sensitive to rapid changes in rates than it is the actual rate itself. So like stability, even at this level, might, actually, not be a bad dynamic for our market for a little while.
Yeah. I want to respond to that. But
I don't like to wait around. Like, that's what I'm saying. Like,
yeah.
I just don't, I think it's really hard I think there's a lot of consumers betting on a very significant home price and rate environment very soon. I think that's a bad bet to make. That's
yeah. Well, you pretty sure saw you should never bet on that. This is where the ball lies. How do we play it? And so, guys, Jeremy's taken 17 million in loans over the past 2 weeks. So, I mean, that's more than most loan officers do in an entire year. And, on track to do. And so here's what I bet, and I believe, I think servicers are going to do great. Like they're going to have a historic level of retention. And you know what else I think? I think the Jeremy Forciers, the Daniel Saws, the process-driven local players that are delivering an elite experience to the consumer, they're going to kill it too. And who's not going to win? Folks in the middle. Like status quo is not the way to play the game. The most elite people. And by the way, elite doesn't mean they have some special, born given talent. It means that they come to calls like the one we're having right now. They read HousingWire consistently. They follow the Mortgage Coach community. When they have a call like this, it's not just edutainment. They've taken a couple critical notes, and then they're just like, how can I do what he does? How can I do what she does? And then they're just systematically and consistently doing that. So, guys, it is game time. Like it's game time in the mortgage space. Now, I did have one debate. Tell me what you think on this, Clayton. And by the way, full disclosure, I am an optimist, in case anybody has never noticed that about me.
You can't be an entrepreneur and not be an optimist. But
yeah, but there was this taint. Well, it's not going to be as good as you think it is. Well, I'm like, who are you? You don't know what I'm thinking. But there were some pretty smart people making some data-driven cases that, hey, purchase is going to be up 10%, and refi is really only going to do this. But no one said, you know what? That's true, but there's 100,000 less loan officers. So there are some survivor benefits left in the business. And then tell me what you think on this thing. And then the people who are really elite that are like, we are now in like an advice market. Like if you can, for a purchase, if you can really deliver a better experience, use your Altos data, be smarter, you can personalize that for a consumer and put that into like a mortgage coach. Like it could be really, really good for some loan officers. Like it could be radically better in 25 than it was between the survivor benefits and the fact that we've really changed into like this NAR settlement. We're still in the first inning of the NAR settlement changes. What are your thoughts on that, Clayton?
So quick take here is that anytime you hear anybody talking about their take on the market, stop and think, who are they talking to and through what lens are they trying to communicate that information? So when we talk about the market likely not moving more than 9% on the who that was supposed to land with in that room are the owners and CEOs of mortgage banks, who it's very hard to shift your volume substantially faster than the direction the market is moving. You're stealing market share, or you're losing market share. That can move faster as an originator. So when we talk about survivorship bias, there's been more washout and departures of LOs than there has been washout of mortgage banks. Surprisingly, the banks, there's been less consolidation and less BK and less exit than we expected on the bank side. There's more people just like kind of cockroaching along, like staying in the game than on the individual LO side. So like I think that might be one of the dividing factors of like who are you in this industry? And then how does the market interpretation apply to your specific role in the industry? And as like market predictions mean something different for the owner of a mortgage bank than they do the originator. So it doesn't mean you don't listen to it. It's just like, wear the hat. What hat am I wearing? And how do I interpret this for me? And I think the survivorship bias thing is real, or survivor benefit is real for both sides, for banks and LOs. It just might be stronger for LOs.
Yeah, that was some really good wisdom right there. Like I got a lot of value from that. Really, thank you for that. By the way, community, are you getting value? Give us a little reaction, whether you're watching this on YouTube, Facebook, if you are in Zoom, use these little reactions. Is this a good getting any takeaways?
You were right, Dave.
Questions?
Those little reactions, those emojis make you feel good when you're on stage. I
Right?
appreciate
Yeah,
that.
no,
Hit a
I like it.
Hit a dopamine.
Yeah, thank you for the reactions. If anybody's got a question, bring it. Could be for Clayton, could be for me, could be for Todd. We're going into the last 5 minutes. Todd, before we kind of do wrap up questions, any questions you want to make sure get answered for yourself or the community around either one of these events?
Well, Clayton's got me thinking, because he said behind the scenes, everyone was talking about rates not coming down, right? So all you should be thinking about that, right? We're definitely, it's just such an interesting market, right? And that's really why I just think you got to be flexing that muscle, because I like what Clayton said, don't be cockroaching along. I'm like, ooh, that is a rough one. And I'm like, gosh, do I resemble that some days, or am I really moving forward like a professional mortgage athlete every day? And so I definitely had me thinking there as well. Clayton, is there any other takeaway from either event that we haven't discussed that would be worth touching on before we wrap up?
A tiny one. I'll give like 30 seconds of airtime to this. So over the last 2 years, there was a lot of focus from bankers and originators on expanding the product suite, and people like running after non-QM and reverse and other product areas because they're trying to create opportunity in a low environment market. We are seeing a shift of energy back toward QM. So like Fannie and Freddie product is like front and center for most originators we're talking to right now. So I think people are running toward the fastest opportunity, but that might mean there's a gap left in the more diverse product set. So I think that's a question for originators to ask themselves. Hey, am I the person who runs fast into the QM segment, or do I serve a group of borrowers and consumers who benefit from a more diverse product array? I think that's going to be a very specific, individually specific strategic question, but there might be a gap left in like the outer lanes of mortgages.
I think that's really
All
good
right.
advice, right? You know, think about that, because if the predictions we're hearing are right, that it's going to be a really crowded space for us, especially if rates, you know, continue to come down like we would anticipate, competing with our servicers, right? The servicers aren't really competing in that non-QM space, DSCR loans, bank statement loans, reverse mortgages. And I think that there's also an opportunity when you talk about those things, if you're an expert, to get in front of real estate agents, right? To get in the room to discuss and educate on those things. I can tell you, actually, I taught a class earlier this week alongside one of the team members on my team, where we taught on reverse and we taught on down payment grant loans, because again, it's something that people aren't talking about in the market, but a real estate team wanted to get their agents an education. And so I think there's an opportunity for you also. I love that take, Clayton.
All right, guys, before we run out of time, I just put it in chat.
Thank you.
Guys, if you have not already become a member of HousingWire, it's easy, guys. Just go to housingwire.com/membership, and there's a link down below. $40 a month, you know, less than a Starbucks habit. Pay by the year, 224. Go here, click, get on the program. If you lead a team, Trust Engine, we have one of these options. I'm not sure which one, but we have multiple subscribers. Get this. And I've done past interviews with Clayton where we just talked about house hacking, or excuse me, not house hacking, news hacking, like how to read HousingWire and then integrate it into the service and value you give people. Dan Rawich, who does our economic update, I mean, I don't think a week goes by where he's not taking some content from HousingWire and he's bringing that into the market with content or with context, personal context. So so in these last 2 minutes, just give us a little class on, you're a loan officer. How would you use your platform to bring more value to, your customers in social media?
Yeah, well, thanks for that shout out. You didn't have to do that, but I do, appreciate bringing more people awareness of what we're doing in HousingWire. Our goal is to inform and educate mortgage and real estate professionals. We're here to serve the professional. We have no aspiration of taking our information and news to the consumer. We think of that as your job. So if we can educate the professional and help you take it the next step further to help people understand what's happening in terms of product innovation, what's changed in terms of housing market and inventory and home price increases and decreases, what's happening in rates, take the information from Logan and Mike and James Kleiman and Flavia Nunez from our news team and relay that information in the consumer lens to help borrowers, home buyers, potential home buyers understand what's happening in housing. That's what we want to do. So like we see some of the most effective and high producing mortgage professionals out there take HousingWire articles, talk about them on social media, put them in their own words and their newsletters that they send out to clients and referral partners. Like that's what I see as like winning for us when we see our subscribers go out and teach from what they've learned. And that's the quick news hack, Dave.
So Todd, do the win by noon close. Bring it home, brother.
Well, if you haven't already hit the link to sign up for HousingWire, I would strongly encourage that. It's definitely information that I use and I educate on. So I would encourage that. And I would just really think through. We covered a lot, right? There's some things we talked about that could be a little scary to some of you. And I want you to take that fear, if you have any of it, and turn that into motivation, turn it into action. Because the bottom line is this, is we see people that are winning, right? We see that Jeremy's originated 17 million of loans of that just recently because he's putting these strategies in place, he's taking action. And so I think that's always what I'm going to encourage you all to do is not get frozen, right? We talked about the fact that you have survivor benefits, right? You're competing with people out there, you're still at it. And now it's just time to go out there, shine some love on those people who are looking forward to hearing from you. Let's make sure we continue to support Clayton and HousingWire and all the different things that he talked about that they're doing to add value to our industry. As always, Dave, it's great to be here alongside you. Clayton, it's been a while. It's good to see you.
Y'all are so
right,
good at
guys.
this. Thank you for inviting me today.
Yeah, no, we really enjoyed it and got a lot of value from it. So, guys, this Tuesday, 9 o'clock, we're going to have Sean Herrero, one of the top 1% of the 1%ers in the industry. I actually heard from Hunter Marquardt, who's one of the, I think he's going to do 170 million with cross country. And he said, hey, ping Sean, he's #1 on the list right now. So, I mean, this guy's consistently one of the top 10 loan officers across country. And guys, we're going to define what it means to be a modern mortgage advisor. Like what is a modern mortgage advisor? This Tuesday, 9 o'clock. You can always go to savageinsights.com. Whatever the next event is, will be at the top. And whatever some of the best videos and things I think you should be watching will be right up there. So Clayton, good seeing you. Hey, by the way, it's good having coffee with you. Thank you for meeting with me.
Well, I mean,
on,
after
Tuesday.
I get your joke about the Starbucks coffee habit after seeing your fancy cappuccino habit. That could get expensive.
Yeah. Go to Herb's. What it was Herb's, right? Herb's in
Yeah,
Dallas.
Herb's Coffee Shop over near SMU in Dallas. That I think that was my first time going there this week, but I've been twice since. So pretty good spot.
Yeah, it's legit. So guys, this is a wrap. Have an awesome weekend. Take care, everybody.
All right. See y'all.